Let's bring in our market experts. We welcome our trillion-dollar man, Robert Dole, Vice Chair and Global CIO of Equities at BlackRock. Also with us, Art Hogan, Managing Director at Jefferies, and Peter Schiff of Euro-Pacific Capital and author of the little book of Bull Moves in Bear Markets. Bob Dole, I want to put a chart up. I love charts about market prices, which I think are smarter than economic models. We have a chart of gold and copper. Let's put it up there. In the blue, gold is coming down. In the yellow, copper is going up. Dr. Copper is signaling economic recovery, Bob Dole. On the other hand, Dr. Inflation, which is gold, is signaling lower inflation. I think this is totally bullish, but I want to get your take.
Totally agree. Good signs. The copper, I think, is a reflection of the fact that emerging markets have all in the bottoming process, signs of life here and there. China, prototypical example. And I think it's also suggesting that the big black hole people feared in the developed world does have a bottom, and eventually we'll have a recovery here as well.
And what about all this earnings stuff? I mean, look, it seems to me first quarter earnings are already anticipated and discounted into the stock market. There may be other announcements of government policy or economic statistics, but what about the better February and early March economic numbers outside of jobs? And what about the earnings point?
Earnings, as you know, are at best coincident indicator. They are already factored in by the market. My guess is some of the bears for the full year in 2009 have gone too far in cutting estimates. As you point out, 2 months in a row, retail sales better than expected. Last week, consumer confidence improving. Several home statistics like first-time home buyers showing signs of life. Look, we've got a tough economy, no getting around it, but it's no longer all bad news. We're getting a lot of less bad news and maybe eventually some good news.
All right, Peter Schiff, Dr. Gold, a.k.a. Dr. Inflation, is saying don't fret so much about inflation. I know you do.
Well, I think you're reading it wrong. I think what's happening is certainly investors are getting a little bit more optimistic on growth. So they're selling some of their defensive plays like gold, and they're buying copper. They're buying more stocks. But the reason everybody's getting optimistic on growth is because they think the government might have success at creating growth by creating inflation. I don't know about the growth, but we're definitely going to get the inflation, and that is very bullish for gold.
Well, what's the signal for inflation? I mean, I've always used gold. I could use the Treasury tip inflation spreads, but they're not really going anywhere. They're less than 150 basis points. What is the signal, Peter?
The signal for inflation is inflation. All the economic stimulus is inflation. All the bailouts are inflation. Everything is being funded by central banks printing money. That is inflation. And you don't get economic growth by printing money. You know, what gives you economic growth, what creates purchasing power is production. If you simply print money, you don't create purchasing power. You just make prices go up. And that's all that's going to happen.
Hey, Art Hogan, you had to print some money. We had credit deflation, housing deflation. We actually had monetary deflation because the Fed didn't print any money for about 18 months. I mean, go ahead, take a whack at this one.
No, I think you're absolutely correct. I think the point we're missing here is we need a modicum of inflation here. We're in an economy. We certainly do, Peter. And the point that you're missing is if you look at every recovery we've seen and every turnaround from whether it's recession or economic slowdown, the first thing that turns things around is a modicum of inflation.
Well, that's why we're in trouble. Remember, we had all these stimuluses during the Greenspan era. We're suffering that stimulus hangover right now. You know, if you have bad loans, you simply can't sweep them away by printing money and say, well, since we lost money, we're just going to print up some more and it's all going to be okay.
Art,
it doesn't work that way.
Is your point, though, a whiff of inflation is better than severe deflation, or where are you going with this?
That's exactly correct. The point that Peter doesn't come to is what we don't need is a deflationary or stagflationary economy. We need to see a modicum of inflation to grow our way out of this. We talked about banks growing their way out of this. We're going to see all industry growing their way out of this. And to do that, you need growth in the economy. Part of that growth is embedded in a sustainable inflation rate and a sustainable growth rate.
But the only thing that's going to give us real growth is if we stop spending money, if we save money, if we invest in productive capacity and produce more. We're not going to get any of that by simply printing more money. We're going to get an inflationary depression is what we're going to get.
One message. It's kind of a one message. I mean, Robert Dole,
it's the right message,
on
though.
the way out, Bob Dole, I mean, one of the other things that I like is the rise in the emerging market stocks. I think that's a good signal for commodity revival, the end of deflation, and the potential, if I include China, which has done a great job performing, Bob Dole, this is a signal maybe the world economy is bottoming, maybe recovery is coming sooner. I mean, I got to tell you, I think we're going to have much easier GDP in the first quarter than people think, consumer spending up. I think we're going to have positive GDP by the summer, Bob.
We need some nominal growth in this world, and that comes from some real growth and a modicum of inflation, to use the word. As long as we keep it contained, that will help people pay their bills. It will help profitability. It will restore confidence. I think we've turned the corner.
What's a little bit inflation, just to get Peter Schiff's collar up again?
Like being
What's
a little bit
inflation?
pregnant. That's what it's like.
It's like, okay, give me a number. 1%? I mean, we're at zero right now.
It means not negative, not zero. You know, a couple of percent's not all bad.
You agree with that, Art?
2 to 2.5%.
You can live with 2 to 2.5. You know, Peter Schiff, in the last, the great bull market spanning the 80s and the 90s, the inflation rate, I don't know, was somewhere around 2.5%. Yeah, and it was a pretty good deal.
Yeah, but
before the Fed started stop, go, stop, go, stop,
yeah,
go.
but that doesn't mean it was inflation that was creating growth. If we had a freer economy, we'd have falling prices. If we had sound money.
No, inflation doesn't create growth. I'm just saying.
And a growing economy lowers prices.
But let's assume we have some modicum, to use that word again, of free market economics. Now, we can debate that in the next segment. Art is saying 2% inflation is something we can live with. What do you think? Peter?
No, if you compound that over years, it destroys the value of money.
Right,
I don't want any inflation. I want money to gain value.
All right, I want money to gain value too. Growth, that's what I want. Free market economics, that's what I want. Cut tax rates, that's what I want. Lots more ahead. How now, Dow Jones? We'll be right back. You're watching the Kudlow Report. There's some good news out there, folks. Believe me, there's some good news.